You're welcome to another edition of the Economy and Politics Show, where we discuss developments in the economy and how it affects the populace. Today, we'll be looking at the manufacturing sector and the reforms and investments in Nigeria's manufacturing sector. How is it going? That will be our focus of discussion today. With me to have this conversation is Titilope Oni. She is the head operations of the Nigeria Economic Summit Group think tank. She's joining us virtually for this conversation. Nice to have you, Titilope.
Thank you very much, Otto, for having me. It's great to be here.
So let's begin with the fact that the National Bureau of Statistics released the first quarter 2021 Gross Domestic Product report, GDP. And looking at the manufacturing sector, it's quite interesting that it grew at 3.4% from 1.51% in fourth quarter 2020. That shows some improvement, and even the purchasing managers index should have about 49 points, according to central bank's report, which shows that there's been an improvement in the manufacturing sector. But let's first begin with the issue of suboptimal investments in the sector, which needs to be addressed. What is your take on what must be done to address this? Because it's been a challenge. Industry players have called for these issues to be addressed head-on, and we have an opportunity to do this now.
Yes, thank you so much, Otto. Well, the manufacturing sector in Nigeria has a lot of potentials and opportunities. It's one of the largest in Africa, and we understand that the level of growth is showing that it's actually recovering from the pandemic. However, let's look at it long term. Let's look at how it has been, because there are some structural challenges and issues that has inhibited growth and expansion in this sector, and this has led to the suboptimal level of investment in the country. Last year with the pandemic, all the things that happened, weak consumer demand, the clam, or if you say supply chain disruption, made the industry to contract by about 2.7%. And of course, with all this, we could see that it wasn't really, the sector wasn't that attractive for investment and to allow for increase in investment flow. Like I mentioned earlier, there were structural challenges. They've always been these structural challenges in the sector, as so many challenges has beset the sector, and the pandemic only made it worse. We are happy right now that there's some level of policies that are coming into place to bring more like a soft landing for the sector. But of course, we know that the government can do more and should do more. If we look at the structural challenges, the land border closure in September 2019, the power supply challenges, which has been in the country for as long as I know, the infrastructure deficit, of course, we always talk about poor road networks, and all this compounded with policy inconsistency, irregularity. Today there's one policy, tomorrow there's another one, or it could even be a complete reversal of policy of the policy. And again, let's not forget the exchange rate pressure, the pressure on foreign exchange, and all this combined together to make business environment very unfriendly. I call it the VUCA business environment. Of course, it's very highly volatile in terms of the exchange rate pressure. Of course, there's some inconsistencies in policies, like I mentioned. The level of uncertainty is very, very high. It's a bit also complex, because there's really no industrial policy framework for the manufacturing sector. So it's complex in that an investment cannot say, okay, an investor cannot say, I want to invest in Nigeria. Take some plans or policy documents of the government and look at it and plan long term, it's a bit complex. And you can also say it's kind of ambiguous because some of these plans don't have clear goals with monitoring and evaluation mechanism to ensure implementation. And also, they really don't have, they don't really speak specifically to the linkages and the strategies that should be done or devised to attract investors into the country. And you mentioned the suboptimal investment. Of course, if we look at the numbers, I always say let the figures speak. If you look at between 2013 and 2020, the amount of investment into the sector was nearly about $15.7 billion. And last year it was about $326 million. This is almost like 0.08% of our GDP. This is really, really small, especially when you compare it with a country like Malaysia that does about $3 billion, or even China that had about $31 billion. We can see that there's really that government needs to up their game in terms of attracting investors so that we can optimize investment in the sector.
Yes, and you talked about issues around policy. So I'm going to take you on now because that's the next area of discussion. The role of a robust and strategic industrial policy in driving our manufacturing sector. If you look at industrialized and emerging economies, one of the most remarkable things about them is the intent, the policy, the trust, the strategy, and the end game which has driven their sectors. For Nigeria, we have policies like the Nigeria National Industrial Revolution Plan, NIRP, which we're hearing that the minister, current minister, Otumbani Adebayo, is talking about rejigging that policy. But how critical is it for a robust and strategic step to be taken now? How critical is that for our manufacturing sector?
Okay, thank you very much. Let me just start by giving a good example of a policy that has worked in this country. Let's look at the 2012 National Sugar Master Plan.
Okay.
We can see with that the federal government was really committed to ensuring self-sufficiency in the sugar industry. It's important to signal to the investor. When you signal commitment, when you signal that you have a long-term plan, when you signal that this policy, you are committed to it and it won't change for a very long time, it's easier to attract investors that way. With that, we were able to see about 157 billion naira come into the country as backward integration towards ensuring the self-sufficiency of the sugar industry. And this shows to say that, especially when there's a clear and consistent policy direction, of course, when there's this intersection with there has to be, of course, the opportunity, which we know is available in the manufacturing sector, and the clear and consistent policy direction with enough government support to ensure like a soft landing, because the investor is taking a risk by coming to your country. So there has to be this, we need to move away from the VUCA environment and ensure that we have this enabling environment. So we saw that mix for the sugar industry, and that's why we saw the amount of inflow that came in. We really cannot underscore the importance of the policy, especially when it gets to the detailed sectoral level, but it has to be clear. We cannot overemphasize the need for having clear targets with monitoring and evaluation mechanism, and a signal from government that they are committed to drive this, and not having a policy document sitting pretty in someone's shelf. No.
I like the fact that you said there is need for clear goals and the need to address every issue of ambiguity and the importance of the linkages. Now let's get on to the opportunities for scaling manufacturing to drive our competitiveness. What are the opportunities you're seeing so far in the manufacturing sector?
Let me start by stating the opportunities. Then before I now go to the awareness of these opportunities. Okay, so let me start even with the barest. The market size of Nigeria, of our economy, is a very huge opportunity. And let's even dissect this market size a bit. If you look at the goods imported into the country, and you consider that about 64% of the country's imports is made up of manufactured goods, then you understand that we cannot even produce to meet our demand. It's more like we are giving the money to the likes of China, to the likes of Malaysia, when we can expand our manufacturing sector, attract investors to come and invest, and we retain the money in Nigeria. Let's move to export. Export is just, for manufactured goods, export is just about 7%. It shows that, okay, so you can even say that if you can produce enough for your country, what are you exporting? But it's not like that. There's also something called targeted export, where you know that you're producing some things to export them. And this goes a long way to show that there is enough opportunity in the market demand. Also, the ratification of the African Continental Free Trade Agreement is also another, it's also another opportunity for us to grow this industry, especially when we can minimize the barest minimum, the vocal environment. The Nigerian Investment Promotion Commission, NIPC, had also in their report and research highlighted some key subsectors of the manufacturing industry that more like pointers, more like signaling to investors that there are opportunities in these areas. For instance, the wheat value chain, wheat processing, cassava also. If you look at industrial starch, most of our companies import these things. We have cassava in our country. Why can't we grow the value chain such that we can produce en masse this industrial starch? NIPC also highlighted rice processing, and in our research, we also highlighted other investment opportunities, for instance, pharmaceuticals and oil refinery. But let's not forget, more like there has to be an intersection between the market opportunity and government support. It has to be linked, or else whatever we're saying, the investment inflow we're asking for will not happen. Let's take, for example, the figures between 2019 and 2020. We had about $46 billion as announced investment. But guess how much came in, how much we actually realized? Just $2 billion. So it just shows clearly to show that investors are aware of these opportunities. They know about these opportunities. But there are key things that government needs to put in place to ensure that it's more like they are taking a risk. So what's the soft landing for them? Where's the enabling environment for them? So that's it.
Now, Titilope, how can the government attract significant investments into this sector? Because every analyst or economist that you know that talks about development in an economy says manufacturing is very critical. When you have a strong and vibrant manufacturing sector, you know that that economy is industrialized, is productive, and therefore it creates more jobs and people are lifted from poverty.
Okay, like you mentioned, I touched on a bit. I usually say, how do you eat an elephant? You eat it in bits. So it would be good for government to prioritize, like identify specific priority subsectors, and it's always good. Communicate it to them. Communicate it. Whatever way. I love the way the NIPC is doing that in their research report. We need to have more of this, and of course, it doesn't just end there. There has to be a plan that with specific goals, like I mentioned earlier. And we write wonderful plans. Let's start implementing. We need to start implementing them, because the investment inflows won't come until they see the commitment from government. And a very quick win for us, for us right now, is for the government to address the issue of insecurity. This is very important. We cannot overemphasize the importance of this. Because as an investor, if you ask me, an investor won't come in if he knows that his life, his property, and even the money is bringing in is at risk. So government needs to resource security agencies, be it by providing equipment or by providing training, so that they can adequately combat the issues of kidnapping, banditry, and insurgency in the country. And then finally, you also mentioned it yourself. It's more like these things we know them, is to implement. The problem of the infrastructure deficit, this is long overdue. The government needs to target infrastructure that they need to work with. We understand the financial constraints, and also we are recommending, especially in our policy brief, that government should have some public-private models to bridge this infrastructure deficits. It's really long overdue.
Thank you very much, Titilope. I like the fact that you highlighted the importance of that intersection between government support and market opportunity for manufacturing. Also, the fact that the Nigerian Investment Promotion Commission has been doing a lot in terms of identifying the critical areas that needs to be addressed to boost our manufacturing sector. And also the need, like you said earlier, to set clear targets, goals, and linkages for our policies to ensure that we're doing well in terms of this sector. And also the importance of tackling insecurity, because nothing can happen in a country that is bedeviled by insecurity. Thank you once again, Titilope, for this time, and we look forward to having you in subsequent editions to discuss developments in the manufacturing sector.
Thank you so much. Thank you for having me.
And that'll be all for this edition of the Economy and Politics Show. I guess you enjoyed this conversation, but to get further developments and insights into what's happening in the economy, you could log on to our website, www.proshareng.com, and you will get all the latest developments. When you get to the website, go to the right hand of the bar, click on Nigerian economy. You get all the news stories around the economy, and also you'll see developments around manufacturing, and also the Nigerian Economy Summit Group, various articulated policies and statements it's been making published on our website. If you have comments and views or questions around our conversation today in the manufacturing sector, send your views and comments to otuabasi.abasekong@proshareng.com. I take that again. Send your views, comments, or questions to otuabasi.abasekong@proshareng.com. It's being displayed on the screen. Also follow our social media handles that you can see displayed on the screen. Don't forget this period that you need to stay safe. Thank you for watching, and have a nice day.